Hey, you. Yes, you. Are you paying attention? Yeah, the market is all over the place. But right now, we're at a pivotal moment in the blockchain industry.
We just started implementing our process for recording deeds in Bergen County, New Jersey. It was actually the largest blockchain deed initiative ever in U.S. history. Bergen County is the largest county in the state of New Jersey, and we're migrating all of their deed records onto the blockchain, and going forward, we'll be recording new deeds onto the blockchains.
Unlike some of the other iterations and some of the current iterations, it's not really trying to create tokenized stocks as a separate category. It's actually trying to, like I said, upgrade the underlying technology of how stocks are traded. So I don't even really like the term tokenized stocks. What I prefer is just digital stocks.
Just recently, we announced a very, I think, monumental partnership with CIS, which is one of the largest payment provider in Japan. They have about $4 billion in revenues. We're going to be taking about 50% of all credit card transactions in Japan and putting them on chain on Avalanche. That's a big deal. $2 trillion moves through them annually. So it's this really high velocity payment processor. And we've been working together for a long time in combination with Sumitomo and Mitsubishi Bank.
Globally, financial institutions and government agencies are finally using blockchain to replace aging operational systems. Everything from property records to stocks and US treasuries, all kinds of financial assets and data are finally coming on chain. The convergence between crypto and TradFi has been the biggest theme this year, with real-world assets tripling to over $35 billion from $13 billion a year ago. And Avalanche is the third largest layer 1 in terms of RWA assets. And while total asset value is still small compared to overall crypto and of course to traditional finance, it's where many see the most potential for growth. As major names from BlackRock to Franklin Templeton and Apollo are tokenizing assets, while banks like JP Morgan and fintechs like Stripe and PayPal are using stablecoins and decentralized networks for better payments and settlement layers. That's because the user interfaces we interact with every day sit on top of backend processes that really haven't changed in decades.
Yeah, I don't know if anybody's ever gone to their local county office, but there's a bunch of file cabinets and folders with handwritten updates to the actual deeds.
Right now, they're kind of all over the place. This is, most counties, they just have deeds and these records and different books and page numbers, they call it, and nothing is indexed by property. So the first step is taking all the historical documents, indexing them properly so we could build a clear chain of title in historical chronological order.
The system that runs our stock exchanges today, the NASDAQ or NYSE, all the way down to sort of technologies behind it like the DTCC, is technology really from the 80s and the 90s.
Today is when we're finally seeing the great asset migration starting to happen. But it's important how that's done. At first glance, tokenization is easy. You take a real-world asset, like a stock, a building, a car title, and make a digital representation of it on chain. Technically, that's straightforward, but it's also the lazy way. The real challenge and the real opportunity lies in making those tokens the actual assets themselves, carrying the same rights, ownership, and legal recognition as their off-chain counterparts. That's where compliance becomes the key ingredient. And that's exactly where Avalanche is distinguishing itself. Not just by making assets tradable on-chain, but by doing it in the legal and compliant way. Some banks and companies are issuing tokens and transacting in private blockchains, compliant but closed. Others are issuing RWAs in public blockchains, open and interoperable, but in a regulatory gray area. Avalanche is betting on a third path, offering programmable rails that carry both compliance and interoperability. Avalanche Ones allows institutions to enforce their own rules and keep their own validator sets, while still plugging into the Avalanche C chain, the open and permissionless liquidity hub. In other words, some tokenized versions often don't carry the same rights or legal protections that define the actual asset, while others live in closed systems that don't carry the benefits of using open blockchains.
There's not really a compliant tokenized stock standard that actually confers you all the rights of that stock. And this means voting rights, dividends, all those kinds of things. Not a single standard. Not a single standard out there.
We see ourselves as building the digital backbone for real-world asset tokenization, starting with the government level. The reason it's important for real estate specifically is because real estate tokenization doesn't mean much if you're not bringing the legal process on-chain. And by what I mean by that is the legal conveyance of ownership onto the blockchain. So we're working with county clerks, municipalities, and state governments to facilitate the in real life process of recording documents and keeping track of the chain of title in their official system of record.
Even when tokenization makes financial sense, many institutions can't adopt it when the infrastructure doesn't support their requirements, whether it be jurisdictional control, KYC, AML, and other counterparty risk and compliance requirements. A tokenized asset is only useful if it can plug into existing workflows, and that requires standards.
I'll take that a bit further and say standardization around kind of how we engage these tokenized assets. I think we're starting to see these standards form and get well adopted throughout the ecosystem. So not only having the token standard extending from ERC20 to kind of ERC 7540 or 4626, we have standardization around what does it mean to report NAV on a tokenized asset, so that these NAV reports, fed via like Oracle platforms like the likes of Chronicle, can be easily accepted into on-chain repo lending markets, like that of Aave and Morpho. And this level of standardization helps, I think, broaden this adoption, because you can really accelerate the onboarding of assets.
This is a gap that Avalanche's model is trying to fill by aligning the blockchain environment with the way real assets actually work. So the next question is, what about Avalanche is especially suited for institutional use cases? We briefly touched on this, but let's get more specific. For governments, banks, and regulated financial institutions, the requirements are pretty clear: privacy, jurisdictional control, KYC and AML compliance, predictable fees, and reduced counterparty risk. Most public chains weren't designed around those constraints. Avalanche is one of few examples of a platform built specifically around this model. Instead of one global blockchain, it allows institutions to run their own purpose-built blockchains with their own validators, their own rules, their own compliance environment, while still being a part of a broader network. This is the Avalanche L1 model.
In the real estate world, you can't remain anonymous. You can't sell a property to CryptoKitty69. You need to know who the person is. So identity is a super important part of our solution, and that's something that they're always thinking about as well. Being able to, with a biometric scan to, KYC or prove your identity over a wallet address, which is extremely important in real estate. A lot of the state officials that we met with are very sensitive about their data and where it's being housed.
For a county government, for example, that can mean controlling where data is stored and who validates it. For a regulated financial platform, it can mean embedding KYC rules or settlement logic directly at the chain level. For institutions exploring tokenized assets, it can mean building on infrastructure that reflects the legal and operational structure of those assets.
In the beginning, we played around with a lot of different options. Ethereum didn't really work for us because of the gas fees. It made it difficult. The thing that drew us to Avalanche was the ability to customize our own L1, which at the time they were called subnets. But what's important when you're working with governments and trying to bring governments on chain is you need a private federated network that's permissioned, and Avalanche allows us to really fully customize our blockchain and set gas fees to where we need them to be.
That meant we couldn't have an open chain. chain. That was just not possible when you're dealing with securities like this, and specifically NMS securities. Again, NMS is the national market system, meaning it's the governing set of compliance and regulatory rules for public stocks. So essentially, we needed to work with a chain partner that would allow us to have that level of control in terms of how do we make sure that this is not a completely open system where anyone can sort of come into it. However, anyone who's been cleared by the SEC or FINRA could participate. So it is open, as in Dinari alone doesn't control it. It has to be divested control. In fact, our vision for this entire system for our L1 is that it's co-owned by various players in the ecosystem that are doing the different aspects that I talked about in terms of how equities get traded and all this stuff. And so Avalanche gave us the opportunity to essentially control on that fashion. Obviously, it had to be quick. Obviously, it had to be cheap. And the Avalanche team has been fantastic in allowing us to have that level of flexibility.
So from an Avalanche L1 standpoint, you're able to implement permissioning at multiple different layers. At the validator layer, so for example, a lot of companies want to ensure that the validators are co-located in a particular geography, so that to a data protection perspective, all the data remains within a particular country or region.
Avalanche L1s solve a key problem in tokenization, giving institutions an environment that reflects the legal and operational frameworks they already work with. So let's look at what's actually working. Across different sectors, from real estate to public services and financial markets, organizations are starting to use Avalanche for production-ready systems. These deployments aren't theoretical, they're live. Stablecoins are probably the best example of tokenization to gain product-market fit, not just on Avalanche, but in all of crypto.
Stablecoins are probably the fastest growing and probably the largest part of crypto. There's over $2 billion of stablecoins minted on Avalanche right now.
In New Jersey, the largest county in the state, Bergen County, has begun migrating its deed records to Avalanche. Balcony's approach is different from most real estate tokenization attempts. They're not creating fractional tokens or synthetic variations. They're working directly with the New Jersey government to move the legal chain of title on-chain. For context, the chain of title is the government's authoritative record of who owns the property and when it changed hands. So by introducing and recording deeds directly onto a permissioned Avalanche L1, counties can create a unified, verifiable chain of title, and that can reduce fraud and inefficiency.
And then a byprocess of this would be the reduction of deed fraud, which is actually becoming a bigger and bigger issue as generative AI it comes out. So we're entering an era where it'll be impossible to tell what's real and what's fake, if not for the blockchain. A blockchain allows you to tell what's real, what's fake, because you could trace the provenance.
And the benefit to tokenizing data is obviously the transparency of blockchains, but also the ease of moving that data around.
So that's really how we see ourselves, as this foundational layer for RWA tokenization. A way to scale is also by going after governments, because, for example, bringing Bergen County on chain now brings all the citizens of Bergen County on chain as well, because now they have the ability to claim ownership over their asset and interact with that digital framework of the future. They'll be able to collateralize their assets one day and, provide more liquidity to themselves using DeFi protocols.
In financial markets, Dinari is leveraging Avalanche to do something maybe even more complex: the operational plumbing behind U.S. equities. They're not building wrapped stocks.
It's usually referred to as the digital twin. We have an off-chain version, but we also have an on-chain version.
But what's hard is, actually keeping all the rights associated with those assets.
Well, that's quite complicated. So today, in terms of the shares, you have the depositories where all the shares are deposited. You have the custodian sort of managing those shares on top of that. You have transfer agents that can, on behalf of issuers, ask certain things to be done with those shares. You have broker-dealers and clearing broker-dealers that are working with the depositories to make sure that the shares are recorded in the right person's name. You have companies like Broadridge that is sending down on behalf of the issuers corporate actions to all the broker dealers so that we can vote on things at the company level. You have to take into account stock splits, reverse splits. You have to enable for ticker symbol changes. This is a massive behemoth of a system with so many different companies that are playing in it. And what Dinari has worked on in the last 4 years is making relationships with all of them. But more importantly, building a technology on-chain that actually complies with and integrates with this existing system to sort of upgrade it from the inside out, rather than trying to build a separate system and asking people to just come over to that system and sort of let go of what they have done before.
Again, as we've said before, to make equities truly digital, you can't just represent the asset. You need to replicate the entire operational framework that supports it. And for institutions that want to issue or distribute tokenized assets, liquidity is the constraint. This is where Grove operates, connecting traditional asset managers with DeFi protocols and helping bootstrap early liquidity for tokenized markets on Avalanche and other chains.
For these on-chain native institutions, our protocol really is that bridge to enable these on-chain native institutions to cross into the traditional finance world.
When you're talking to asset issuers, a lot of the times they want to ensure that their assets are widely adopted in the context of blockchain in tokenized form. And so to that extent, what's really important to them is that there is a robust DeFi ecosystem, that there's various use cases in companies that can in turn leverage their products and services in the context of their businesses, which we can talk about as well. But that's really what's been relevant for them when it comes to talking to banks, many of which you might be building actually applications and capabilities onto on-chain as opposed to issuing assets. That's why it starts to really be important when we talk about Avalanche L1s. A lot of banks historically are used to building on what we call enterprise chains, so blockchains like Hyperledger and Corda and Quorum. And I think over time they've come to realize that that infrastructure is not necessarily like the target state, and they've come to really appreciate the benefits of public permissionless ecosystems.
They're looking for allocators like Grove to bootstrap and help allocate to these new tokenized assets that they're trying to build liquidity and build a strong kind of utility play for on these networks. We are bringing the kind of full breadth of the DeFi ecosystem in markets when we work with an institution, and that's kind of through this kind of modular stack. For example, Sky working with Grove, that's then working with Janus Henderson on Avalanche.
Grove works with BlackRock, Apollo, Janus Henderson, and other major institutions to bring real-world assets like money market funds and private credit to DeFi.
Can we see kind of on-chain native loan originations and credit creation? And when we get to like that stage, right, when we're actually like underwriting a user using the data that is like living on a blockchain network, I think these the right to have a self-sovereign network will become a lot more important.
Other examples, Japan's $2 trillion payment provider TIS rolled out a multi-token platform with Avalanche. California's DMV put 42 million card titles on the network. Skybridge Capital partnered with Tokeny to tokenize $300 million in hedge funds on Avalanche. So across these examples, the pattern is consistent. They're using Avalanche because they need verifiable records, programmable rules, and environments that reflect legal and operational requirements. The deployments we've covered so far are small compared to the scale of global finance, but institutions are starting to move core assets and processes on-chain. And it's just the beginning. This is not the flashy stuff, it's the critical stuff. That's the signal when governments, banks, and market operators pick new infrastructure because the old pipes can't keep up. That's when we see a quiet paradigm shift, and that shift is already starting.